All right, so today we're taking a deep dive into Chevron.
CVX on the ticker tape, right?
Exactly. You're thinking about maybe investing in Chevron. Um, and we found some really cool stuff over at Foking Alpha.
Yeah.
And they basically have like a whole action plan of how to like navigate this stock.
Mm-hmm.
They're looking at like both the risks and the rewards.
Yeah, and you know what I thought was pretty cool about this one is like they're not just saying buy it or sell it.
Right.
They actually have like a roadmap for how to actually play this thing, which
Yeah.
I think is awesome.
I know, it's super cool.
Yeah.
So let's jump in.
Let's do it.
So first of all, like where are we at with Chevron?
Well, right now, CVX is trading at 157.14,
Okay.
which, I mean, considering all the volatility we've seen in the market, it's actually holding up pretty well.
It's not bad.
But Foking Alpha thinks there's a chance it could dip a little bit before things get really interesting.
Okay, so they're thinking there might be a dip coming.
Right.
What makes them think that?
Well, they're seeing some signs that it's breaking down from its upper trend line. Mm-hmm.
Which is, a technical indicator that suggests a potential shift in momentum.
Gotcha.
And they're also anticipating some more volatility in the oil and gas sector, due to all the geopolitical stuff happening,
Sure, makes sense.
which could definitely impact CVX's price.
So they're like kind of combining that technical analysis with like what's going on in the world and the markets.
Exactly.
Okay, interesting. So what does all that mean for investors, though?
Well, here's where it gets interesting.
Yeah.
They think there might be a short selling opportunity coming up.
Okay, now for someone who maybe doesn't like live and breathe the markets every day, like we do,
Right.
what is short selling?
So basically, it means you're borrowing shares of a stock and selling them right away
Okay.
with the hope of buying them back later at a lower price to return to whoever you borrowed them from.
So you're like betting on it going down.
Exactly. You're trying to profit from the price going down.
Gotcha.
So if you think CVX is going to dip, this could be a way to play it. Okay, so for somebody who's like, all right, I'm going to take a gamble. I think it's going to go down. What do they say?
Well, they're saying if CVX gets into that 150 to 160 range, that might be a good time to consider shorting it.
Oh.
And they have these two take profit targets, 130 and 110.
Okay.
So those are the points where they think you could buy back those shares at a profit.
And hopefully make some money.
Exactly.
Of course, like any investing strategy, you got to manage your risk.
Oh, absolutely.
What do they say about that?
Well, they recommend setting a stop loss at 165.
Okay. And again, for like the average listener who's not like, day trading all the time, what is the stop loss?
It's basically like a safety net.
Okay.
So if the price goes above 165, your position automatically closes and it prevents you from losing even more money.
This was like a limit.
Yeah, exactly. You're limiting your potential losses.
Okay, I got it.
Which is always a good idea.
Always a good idea.
Yeah.
So that's like the short game. What about the people who are like, long on Chevron? They think it's going to do really well.
Yeah, well, Foking Alpha is actually super bullish on CVX in the long term.
Interesting.
They've identified what they call an accumulation zone between 90 and 110.
Okay.
They think that's like prime territory for long-term investors.
So why do they think that's a good time to buy?
Well, that range actually lines up with some historical support levels for CVX.
Okay.
So basically, it's like a price point where the stock has bounced back before.
So they're like using history as like a possible indicator of what it could do.
Exactly. Past performance isn't always a guarantee of future results, but it can give you some clues.
Makes sense.
And if you look at the technical indicators, it kind of backs up their view.
Oh, really?
Yeah, like the stochastic oscillator, which measures momentum, it's currently overbought.
Okay.
And the MCD, which is the moving average convergence divergence, is showing some weakening momentum signals too.
So they're like both kind of pointing in that same direction.
Exactly.
I'm going to jump in for a sec for anybody listening who's like, wait, what are those indicators again? Stochastic oscillator is like, it compares the stock's closing price to its price range over a certain time.
Right.
Figure out, like, is it overbought? Is it oversold?
Yeah, it helps you see if the stock is maybe getting ahead of itself or if it's lagging behind.
Gotcha.
And the MATCD compares two different moving averages of the stock price.
Okay.
So you can kind of see the trend and the momentum.
Got it.
So yeah, these indicators are basically supporting the idea that a dip might be coming.
Which could create that like good opportunity to buy low.
Exactly.
Okay, so let's say somebody's like, all right, I'm buying in that 90 to 1 in 10 zone. What about risk management on that side?
Yeah, well, Foking Alpha suggests a stop loss at 80,
Okay.
just in case things take a turn for the worse.
Always going to have that safety net.
Right. And then on the upside, they've got these 3 tiers of take profit targets.
Okay, let's hear it.
So first up, 140,
Okay.
then 160,
Mm-hmm.
and then get this potentially 180 or even more.
Whoa. Okay, that 180 is pretty enticing. Why are they so optimistic about that long-term potential, though?
Well, they think CVX is really well positioned to benefit from a rebound in the energy sector.
Okay.
You know, they see global energy demand increasing, supply getting tight,
Yeah.
and CVX is all about returning value to shareholders through dividends and buybacks.
So it's like they're looking at kind of the bigger picture of the market and the energy sector,
Hmm.
and they're like, this company's got good fundamentals.
Yeah, they think CVX has what it takes to succeed in the long run.
Makes sense.
Yeah.
I think that's a really important takeaway for everybody listening.
Yeah.
You got to look at more than just like, oh, what's the price doing today?
Right. It's about the big picture.
Absolutely.
Hi.
I think this whole deep dive brings up a really interesting question for our listeners.
What's that?
When you're making your own investment decisions, like how much weight do you put on those historical patterns
Yeah.
versus other factors? Like, what's going on with the energy sector.
Right. Or like geopolitical events.
Exactly.
That's a tough question.
It's something to really think about.
Yeah.
And, you know, always do your research. Consider all the angles.
Absolutely.
And of course, we got to say, this is just for educational purposes.
Right.
This is not financial advice.
No.
Investing always has risk. So make sure you're okay with that before you invest any money.
Definitely be smart out there.
Exactly.